UnitedHealth Group, stock ticker UNH, just released their Q2 earnings report, and the stock is down around 4.5%. Now, this earnings report saw mixed results, but perhaps even more importantly is the guidance that the company gave us, because it gives us a lot of incredible insight into what the actual valuation of the company looks like as of right now. So let's go ahead and dig in. As you should probably already know, the stock is down by about 50.2% in the last year due to a multitude of bad news. But in this video, we want to focus strictly on the earnings report. I have previous coverage if you want to get a breakdown of what's been going on. So let's take a look. We can see Q2 non-GAAP earnings per share of about $4.08 was a miss by 37 cents. So that's a decent sized miss. This is part of the bad news. But the good news is revenue was still up around 13% year over year, in line with expectations. So that's about $111 billion in revenue in a single quarter. So this is a very large company. Revenues, top lines are still growing at a very healthy rate. So far, this is actually really good news that's easy to overlook. For the vast majority of the companies in the S&P 500, 13% revenue growth year over year is extremely solid. And for reference, they've been growing revenues at a high rate for quite some time now, actually. If we jump over to the profitability tab, you can see here I've already plugged in UNH stock. And they have a 5-year revenue CAGR of about 10.57% and a 10-year of closer to about 12%. So not only was revenue really good in this most recent quarter, it's actually a little bit faster than they've seen historically speaking over the past 5 and 10 years. Now let's talk more about the bad news. To start, the bad news that we saw for the most part was expected. The second quarter consolidated medical care ratio of 89.4% increased 430 basis points year over year. To generalize this, their costs are increasing. If we scroll down, we can see the second quarter 2025 operating cost ratio of 12.3% compared to 13.3% in the year ago quarter, reflecting business mix. So basically what this is saying is UNH spent 12.3% of its revenue on operational costs in Q2 of 2025, which is down from 13.3% in Q2 of 2024. So this is actually a 1 percentage point improvement. But here's the news that's so important we need to look at. The guidance. Full year 2025 revenue outlook is now sitting at $445.5 billion to $448 billion. So again, let's put that into perspective. If we look at where they finished off last year, 2024 revenue was right at $400 billion. The previous year, about $371 billion. So again, what we're seeing from a top line perspective is revenues are still growing at a very healthy rate. Now that's slightly lower than the consensus estimate of $449 billion, but generally speaking, around 13% revenue growth is quite good, especially for a company that's now looking like a turnaround play. But even more important than the top line guidance is perhaps what we're seeing with the 2025 earnings outlook. Full year 2025 earnings outlook of at least $14.65 per share, adjusted earnings of at least $16 per share. Now, here's what's interesting about this. If we look at what analysts were projecting for 2025 earnings, we'll jump over to the ticker data sheet and plug in UNH. Again, thanks to ticker data, all this data will automatically load in. And like always, if you'd like to be able to download any of these spreadsheets and get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com. But if we zoom in, here's what we need to pay attention to. Before this recent earnings call, the 2025 estimate for earnings per share on average from analysts was about $20.64. $20.64. Now, if we compare that to previous years, we can see in 2024, it was about $15.64 due to the one-time cybersecurity attack costs. Previously, it was growing at very healthy rates. We're talking about anywhere from around 13, 12, 17%. So in 2023, it jumped all the way up to $24.12. Again, the one-time cybersecurity cost, $15.64. Before this earnings report, analysts were still expecting a nice growth in earnings, 2025 EPS of $20.64, but management is telling us that's not going to be the case. What we're seeing is on an adjusted earnings basis, about $16 per share. Now, this is obviously important for a multitude of reasons, but it really impacts the way we look at this company from a valuation perspective. Let me show you what I mean. If we jump over to the stock analysis sheet, let's look at UNH from a historical multiple valuation perspective. Now, here's what we're doing. We're looking at how the market has historically valued this company based on its price to earnings multiple. And for the majority of the past decade, it was actually relatively stable. You can see they were sitting pretty comfortably in around the low 20s mark for the majority of the past decade, a little bit of a climb in 2021, and on average over the last decade, the PE ratio was sitting at 22.93. 22.93, the average PE ratio. For the trailing 12 months, which was about 11.5 on a trailing 12 months basis. Now, to put this into perspective, we can see in 2024, earnings are about $15.64. And typically when it comes to multiples like the PE multiple, when we look at the trailing 12 months PE multiple, we expect it to be a little bit higher than on a forward-looking basis because in most instances, a company should be growing their earnings over time, and historically that is what UNH has done. But based on the data they just gave us, we can actually see what that forward-looking 2025 multiple actually looks like, using the projection of $16 per share. If we come over here to the side and zoom in, using the ticker data function, we can automatically pull in the price for UNH, and we can see it's sitting at $267.76. And what we just learned is projected EPS for 2025 is about $16. So what is the true PE ratio for UNH stock right now? We'll take the price and divide by projected EPS. And all of a sudden, we can see that 2025 PE ratio sitting at about 16.74. This paints a very different picture than when we look at the PE ratio on a trailing 12 months basis, where it's sitting at just 11.5. Again, the stock market is a forward-looking entity. It's not about what have you done for me lately, it's about what will you do for me in the future. Now, with that being said, that 2025 PE multiple of 16.74, as we can see, is still lower than the historical multiple valuation. But historically, this company's been growing earnings at a rapid rate with a high level of predictability. Two things investors are willing to pay for: high earnings growth and high predictability. They provided this from 2014 to 2023, but things are getting a little bit shaky. They're not growing earnings quite as fast, and those earnings certainly aren't as predictable, especially with a DOJ investigation looming. Again, this is why it's so important to look at it on a forward-looking basis, because if we just look at the free cash flow yield on a trailing 12 months basis, it's sitting at 10.32%, which in most instances would be a screaming buy. But free cash flow is much likely to be lower in the next 12 months than it was in the previous 12 months. Now, with that being said, yes, there are headwinds UNH is facing, but they're not broken. Obviously, I've pointed this out in recent coverage of the stock, but we have the CFO and CEO purchasing significant shares in UNH stock. In fact, the amount of insider purchases in 2025 has been more than all the insider purchases over the last 15 years for the stock. While this obviously doesn't paint the full picture, it's a great sign that management is confident they will get back to growth. So based off what we now know about UNH, let's model out what our future returns would look like based on the current share price. Let's come down here and manually adjust 2025 expected earnings to $16 per share. Now let's apply our future growth rate projection. This is the difficult part, because in the short term, with all the negative sentiment and bad news surrounding the stock, it's not likely we see a lot of multiple expansion. But over the next 3, 4, and 5 years, if the stock is able to achieve that 9% EPS growth, it's very likely we start to see that multiple expansion where it gets closer to reverting back to its mean. Now, I don't want to be over optimistic in any model that I put out, so let's assume a PE ratio of 18. All of a sudden, by the year 2030, we're looking at a share price target of $443, total return of 64.7%, or a compounded annual return of about 8.7%. Now, I want to be clear, we're not pricing in UNH's best case scenario by any means. They certainly have the ability to grow earnings at a higher rate and achieve a much higher PE ratio, but at the same time, it's definitely not the worst case either. While in this most recent earnings report, we got plenty of valuable information to how the business is actually performing and forward-looking guidance, we didn't get a whole lot of information with what's going on with the DOJ investigation. And the news that the mainstream media seemed to miss in the last month is listed here from a report with the Capital Forum. It stated the DOJ is changing where it's investigating UnitedHealth Group, and will now be focusing more on the company's pharmacy benefits management unit. This is good news for UNH stock. On top of this, it is worth noting that we are starting to see more Congress buying of UNH stock than we've typically seen over the last couple of years. In fact, this is one of the few quarters in the last 5 years or so where there's been more buying than selling of the stock in Congress. So to wrap things up, the new CEO stated UnitedHealth Group has embarked on a rigorous path back to being a high-performing company, fully serving the health needs of individuals and society broadly. So UNH is certainly one of the more interesting stocks on the market for a variety of reasons. There's people who are very bullish on the stock, people who are very bearish. I think in the coming months, we could certainly continue to see high levels of volatility. And I certainly want to put this warning out there. If the DOJ finds some type of fraud, UNH stock could certainly go significantly lower. If you own the stock, make sure you have some risk management. Don't let it be a large allocation in your portfolio. I personally own some UNH, but it's only around a 2% allocation. But go ahead and let me know what you think of UNH stock in the comments down below. And like always, don't forget to like and subscribe to the channel.